If you just glanced at the market today, you might have thought, pretty quiet. But beneath that calm surface, something pretty big was happening. The high-flying AI stocks, the ones that have been leading the pack all year, they finally hit a wall, and we started to see a major shift in where the money was going.
Okay, so here's the game plan for breaking down what happened on December 15th, 2025. We're going to start with the day's main story, then dive deep into the key data, get a read on market sentiment, and wrap up with what this all means for your investment strategy.
All right, first up, let's look at the headline numbers. And as you're about to see, the final scoreboard was kind of mixed, and it really doesn't capture the full drama of the day.
So you can see here, the S&P 500 and the Dow, they barely budged, pretty much flat. But look at the NASDAQ, a totally different picture, right? A clear drop of more than 0.5%. So the big question is, why did the tech-heavy index get hit so much harder than everyone else?
And this right here is the answer. This gets to the heart of it. This wasn't some kind of market-wide panic attack. No, this was a targeted strike on the AI superstars, the very stocks that fueled so much of this year's rally. It seems investors decided it was finally time to cash in some chips.
So let's connect the dots. The NASDAQ lagged because its biggest names got sold off. But that money didn't just vanish into thin air. It rotated. It moved into other, maybe less glamorous parts of the market. And all of this is happening with traders kind of holding their breath, waiting for this week's big economic reports. They're actually hoping for bad news, believe it or not, because that might just push the Fed to start cutting interest rates.
Okay, now let's get into the nitty-gritty. Let's look at the hard data, because this is where the story of this rotation really comes to life.
Look at this. It doesn't get much clearer. This is that rotation story in a single chart. Money pouring out of information technology and flowing straight into more defensive sectors like healthcare. It is a textbook example of investors shifting from a risk-on to a more cautious risk-off stance, all within a few hours.
And this wasn't just happening in the stock market, not by a long shot. The entire dashboard was blinking the same signal. You had a weaker dollar, falling government bond yields, and even crypto taking a hit. All of it points to investors getting a little more defensive and betting on a slowing economy, which they hope means a friendlier Fed is on the way. So, with this big shift happening, what's the feeling out there? Well, let's just say the experts are not exactly on the same page about whether this is just a little speed bump or the start of something much bigger.
First up, in the bear corner, you've got JP Morgan, and they are not mincing words. They're looking at these sky-high prices for AI stocks and basically warning that a simple 10% pullback might be wishful thinking. They think a much, much deeper drop could be in the cards.
But the bulls, they are pushing back hard. Experts like David Wagner are saying, hold on a second, these tech giants are a different breed. They have what's called operating leverage, which is a fancy way of saying when their sales go up, their profits go up way, way faster. And they argue that's exactly why these companies deserve to lead the market.
And here's the twist. This is what's so interesting. Despite all this selling in the big tech names, Wall Street's fear index, the VIX, it actually fell. Now, what does that tell us? It tells us that even though some specific stocks were getting hammered, there wasn't a sense of widespread panic across the market. Not yet anyway.
Okay, so we've got a rotation, a fierce debate, but no real panic. So the big question is, how do you play this? What's an investor supposed to do? Let's walk through two very different ways to think about this market right now.
And this is absolutely crucial to understand right now. It's not about just tech stocks anymore. It's about individual companies. The days when all tech moved together are on hold. Just look at this. Tesla shot up because of a cool product demo, while ServiceNow and Broadcom got clobbered for completely different company-specific reasons. It's becoming a stock picker's market again.
So this really lays out the two big choices for investors. Path number one, the aggressive route. You bet that this is just a blip and AI is going to keep running. The big risk there, a painful, sudden correction if this is a bubble. Path number two, the stable route. You follow the money, diversify into those value stocks. The risk there, you might miss out on some huge gains if the AI party starts right back up again.
All right, let's pull it all together. Time to zoom out and try to answer the big question. What did today really signal for where the market is headed?
You can look at today's action and tell two completely different stories, and both would have a point. The bull case says this is great, it's healthy. Other parts of the market are waking up and joining the rally. The bear case says, whoa, wait a minute, the generals, the big AI leaders, are falling. And that's a classic warning sign that the whole thing could be in trouble. And that leaves all of us with the big, multi-trillion-dollar question, right? Is this just the market taking a healthy breather, shuffling the deck a bit, or are we seeing the first tiny crack in that massive AI dam that's been holding this whole rally up? The answer? Well, it's probably going to come from this week's economic data and whether those tech giants can get back on their feet.